Inventory is rising, price cuts are everywhere, and if you're a buyer, you finally have some leverage, but maybe not for long. This week, I'm breaking down the national numbers so you can see what's really driving the shift, why 40% of homes are cutting price, and what it means for you right here in San Diego. Because spoiler alert, this market isn't crashing, it's adjusting, and that opens a window of opportunity if you're paying attention. Mortgage rates just got a forecast update by one of the largest players in the real estate arena, and it's the glimmer of good news that we've been waiting for. Fannie Mae now says that we could end 2025 with rates around 6.4% and slide into 6% by the end of next year.
We've been waiting so long for this.
But what does that actually mean for you as a buyer? More competition, less negotiating power? Should you jump in now or wait? In this segment, I'll break down what this revised forecast tells us and how it could impact affordability for you and how to start planning your next move, whether you're hoping for rates to drop or not. Both of these topics covered in this week's San Diego Market Matters, and I'm Karl, your San Diego realtor. Real quick, if you're thinking of selling or buying here in San Diego, I have my contact info in the description below. Feel free to reach out if you want to talk about your options and how I can help you with your next move. Now, let's get into this. Right now, we're sitting just over 1.08 million active listings nationwide, and that's the highest since 2020 and up nearly 30% from this time last year. And while that number sounds big, let's be clear, it's still lower than the 1.2 million we had back in June of 2019. In fact, only 10 states, not including California, are back to pre-pandemic inventory levels. That's 10 states out of 50. So yes, inventory is rising, but it's not overflowing. Zoom into San Diego and the trend still holds. We've had almost 2,900 new listings hit the market in the last 30 days. But we also saw about 2,700 do price adjustments in that same time period. And that's nearly a 1-to-1 ratio. It's not panic selling, it's that many sellers came into the market expecting 2021 and early 2022 demand and are now being corrected by today's buyer expectations. Total active inventory across the entire county sits just over 6,200 homes. And while 1,748 homes went into pending, that's still far fewer than what we need to keep up with demand. Most of that activity is concentrated under 1.5 million, where homes that are priced right and look sharp are still seeing multiple offers, especially if they're new to the market. But if a home is sitting for more than 20 days, buyers are coming in with aggressive asks. Credits, price chops, concessions, they're negotiating harder because they know that the longer a home sits, the weaker the seller's leverage gets. In San Diego, homes are now sitting on average 35 days on the market, up from the frenzy years, but right in line with the balanced market. And let's be real, this is the kind of market we've been heading towards and honestly what we've needed for a while. More listings, more choices, more negotiation. It's not a crash. At this point, it's a correction, and that means one thing. You need to price it right if you're looking to sell. Buyers today are maxed out not only on price, but also on monthly payment. Until mortgage rates come down or income rises, there's a hard ceiling on how high prices can go. Rates are coming down and incomes are rising, but they're doing so pretty slowly. This stagnation-ish is what we need in our market here in San Diego to give incomes time to improve and adjust to all the aggressive inflation we've experienced since COVID. So believe it or not, this is kind of a good thing happening. And this is where rate buydowns are making a big difference. It's not that buyers can't afford a mortgage, it's that it's a big shift, especially for renters. So a temporary 2-1 buydown is giving people room to breathe and time to acclimate. They get 2 years to settle into their home, adjust to the payment, and grow their income. And that's the kind of creative strategy that keeps deals moving in a choppy market like what we're experiencing here in San Diego. So whether you're thinking of selling or trying to time your next move, know this. Inventory is climbing, leverage is shifting, and price sensitivity is real. But opportunity is always there if you know how to spot it. Now, let's talk about the Fannie Mae forecast and more importantly, what it means for your buying strategy and the direction of the market ahead of you. Fannie Mae just revised their mortgage rates projections downward. They now believe that by the end of 2025, rates will be around 6.4%, and by the end of 2026, we could see 6%. That's a 0.1% drop from their previous outlook.
Is that all?
Now I know what you might be thinking, that's not a huge shift, and you're right. This isn't a rate crash, it's a signal though. It tells us that even one of the most conservative housing authorities in the entire country, They see inflation coming down, rates trending lower, and buyer activity picking up. Slowly but surely. And when rates go down, even a little, affordability improves. Monthly payments shrink, more people qualify, and sideline buyers start jumping back into the pool.
This is what we've been waiting for!
That demand, it puts upward pressure on prices, especially in tight inventory markets like San Diego, where we're still sitting below pre-pandemic inventory levels. Here's where this gets strategic. Right now at 6.8 or higher, most buyers are cautious. They're negotiating credits, asking for repairs, working to get some breathing room, as we discussed earlier, especially on listings that are sitting on the market for more than 20 days. But if rates come down into the low sixes, that leverage could start to shrink, and that breathing room possibly disappear. And we've already seen this happen. Just a few months ago, when rates briefly dropped into the high fives, buyer activity spiked overnight. Homes that were sitting for weeks suddenly had multiple offers. So if you're thinking about buying in the next 6 to 12 months, don't focus solely on rates. Focus on your readiness. Are your finances dialed in? Do you have a plan for rising competition? Have you talked to a lender about your options like temporary rate buydowns or a creative loan structure? And if you're a seller, don't tune this out. Fannie Mae is also forecasting price growth to cool even further. 2.8% in 2025 and only 1.1% in 2026. That means we're in a window where pricing high and hoping isn't going to fly. You've got to meet the market where it is, or risk sitting while more competition hits the market next spring. Bottom line, this rate forecast is a nudge, not a guarantee. The market won't wait for perfect conditions, and neither should you. If you want to talk through your timeline or figure out a game plan before things start to heat up, shoot me a message. And that's a wrap. Be sure to like and subscribe so you don't miss next week's market breakdown. And if you found this helpful, drop a comment and let me know. I'll have 2 other videos pop up in both of these corners if you're looking for more info on the San Diego housing market. As always, I'm Karl, your San Diego realtor. I'll see you next video.